Hey, welcome to the closing beat, everybody. Happy Wednesday to you. How you doing out there? I didn't see any good conspiracies posted, by the way. You know, like what? You got another one?
You want to talk about? No, I don't.
No. He's like, no, I don't got one. I don't know. It just had me thinking. I was like looking up, like, what do people believe? You know, people believe the world is flat.
Yeah, that's a real one.
How you come to that?
That's a crazy one.
And I'm like, all right, guys, like this is silly. But then the one person's like, well, if an airplane flies from here to Russia, how come it doesn't have to lower its altitude as it goes?
Oh, okay.
I should know the answer to that. I know there's an answer, something to do with standard pressure and temperature, but I don't know the answer. Anyways, we don't talk about conspiracies here. I just thought it was fun. Kind of got lost in the whole Elvis thing there. We are financial advisors, in particular financial advisors for people who don't think they can afford or use a financial advisor. Go to jazzwealth.com. Right on our homepage, you can actually see. We don't play any games. You know, if we played games, the internet would let everybody know. So just total transparency here. Laid back, relaxed, having a good time. Wine and Wealth on Thursdays we do. That is a class that we do. Last week we did some great stuff as far as like a hodgepodge of information, man. We went nuts, took the shotgun approach, took a look at the inflation numbers, some tax help behind the scenes. We've done financial tips for you each and every month, so hopefully you'll check that out. But we're here to talk about the stock market today. There was actually a lot going on. I just said it yesterday. I'm like, oh, we got Nvidia and a Fed minutes or whatever. It was a lot to digest there. Thankfully, your boy here was able to do it. Let's take a look at the markets. We actually were negative almost all day. What was it, like the last 10 minutes? Let's try it. Come on, we got to see. The last 10 minutes of the day, it was like, bloop, we're back. Nope, we're positive. It's fine. Here's the 5-minute chart. Look at that. Down, 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 down all day. And I'll give you that, the last 30 minutes. We started a little rally and then right there, turned positive for the day ever so slightly. So if you just look at the headline numbers, you're like, well, it wasn't too bad of a day. Now, Nvidia was the focus. God, you would think that there was like, you know, the second coming of Jesus here. It was crazy. Like it was all over. And that's because that was really the only thing to talk about, right? If it was a really busy day and things were going on, and maybe it wouldn't have been such a focus, but nonetheless, it was. It finds itself pulling back throughout the day and now up around the 720s after hours, killed it on earnings, a triple-digit beat on earnings, sales, revenue growth, expectations, blah, blah, blah. Did really well. Now, I haven't dove into the details of it yet. But Nvidia, the reason why, you know, this is such a topic is because they are clearly the biggest beneficiary to this AI craze, right? Everybody else is sort of feeding on the fish of this AI boom that we have here. They are actually, and now we have, once again, we have great proof of this. They're monetizing this thing. There are so many AI companies out there that are like, you know, we're gonna explore using it. We're going to maybe integrate it into some of our services and back-end systems and all that, but it really doesn't provide a monetary value at the moment, and so we're going to take it slow. There's a bit of an investment there. No, these guys are making the chips that very much power what Meta's doing and others, I mean, lots of others, Netflix, etc. And so their GPU demand, pricing, total volume, right? That's the main focus. That's all you have to do, just up. Everything's up there. So that's Nvidia in a nutshell. We'll, of course, cover more of it as I get to dive into what's going on. So what's going to happen now is we have Nvidia strong after hours. Remember that it has a big, strong foothold in the NASDAQ and in the S&P. So you're finding that the futures are up after hours here. The S&P, although it was only up a point or two at the close, now is going to be up double digits, if not, you know, 20 points tomorrow, just because of Nvidia, right? You can actually take at this price, let's see, you can actually take Nvidia. I don't know how to say this, but like it's like 1 for -1. Nvidia can go 1% this way. The rest of the market can go 1% negative, and you have a wash, right? The market will have, the index will have posted nothing. That's like how big this is at this point. So to give you an idea how that's going. Anyways, also the Fed minutes out today, talking about that. Now remember, the Fed minutes didn't get as much attention because this is from January, the end of January. So what the Fed minutes mean is these are the minutes of the meeting that they had. So they release them later, and you can go through and read through what they talked about and comments and everything, things that have changed. AI pretty much takes care of all that now, so you can real quickly see what's changed, who decided on different things there. So there's really no need to read them anymore. In fact, it's an instantaneous like adjustment. It's pretty cool. But anyways, this was important to note because it was before that last inflation number came out, which actually went down, although everybody said it went up. It did not go up. Headline inflation rate, they said, didn't change. No, it actually went down. It just went down 0.03 percentage points. They don't show the hundredth of a place, right? So when they say inflation's 3.6, that's it. They don't say it's 3.60 and it went to 3.57. They just go, it's round either one of those numbers to the nearest tenth and you get the same number. So that was that one. The cool part about what's going on here with the Fed, I think, is that now we're looking past May for rates to be cut. Remember, it was all, oh, March, they're going to cut rates. It's fine. Oh, it's going to be great. And then all of a sudden we got used to, oh, wait a minute, May. Turns out it's going to be May. Well, now check this out. There's a 28% chance of a May rate cut. That's down from 50% just 30 days ago. So now it tells you, oh, if it's not March and it's not going to be May, what are we doing now? June now has a 53% chance of a rate cut, and it was 16% just 30 days ago. So we're now, whether you believe in all the inflation and all that stuff, we're now, think of the mindset. We're all shifting our minds to go, well, maybe June. There's still the likelihood, and everybody's betting on 3 rate cuts this year. But remember, I talked about this last week. The Fed doesn't cut rates just for fun. You know what I mean? They have never said, everything's pretty good. Let's just lower rates. No, they're reactionary. The Fed, that's their whole mandate. So they're not going to just cut rates because we all felt like it should happen. No, they've even been very clear about this. We don't cut rates just because that's fine, just bring the rates down. That's very dangerous to do. Remember, or what we would at that point consider hyperinflation that it could get to. We don't want that. You'd rather slow things down and take the blame for hurting the economy and holding rates too high too long, which they're not even that high, rather than, oh my God, hyperinflation. That's harder to control, right? We can all afford a little pullback there. So anyways, that was a long explanation. I'm sorry. Going back to the S&P here, so we see where we stand right along the, what we call the 20-day moving average, just the average price within the last 20 days. We bounced right off of that here today. The next 30 days going forward ranks as one of the weakest 30-day periods in a year. I'm not saying the worst month. I'm saying just take every day, a rolling 30-day look, and which ones are the worst. It ranks in the 18th percentile, so way down here. And I should say, it doesn't rank as the weakest because it falls apart. It ranks as the weakness because the growth tends to stop. So this 30-day window coming up, the median loss is 0.09%. That's like 3 seconds in the market. That could just happen. I point that out because I want to kind of show that this is that time period where there's not a lot, right? People tend to start to like take their profits. These big stocks that have had their runs tend to sort of take a break, not fall apart, but take a break, a little mean reversion, which I'll talk about. And so when you look at that and add to it the fact that a lot of the markets had a good start to the year, gives you a reason to believe, hey, we could chop around for a little bit. We don't necessarily have to blast off to new highs. We could touch them or whatever, thanks to Nvidia, but we don't have to just blast off to new highs and go off to the races and you miss out on a 10% run all in one shot. That I wouldn't think you have to worry about there. So just a little sluggishness there. Okay, let's do a few other things. So the Dow basically sideways, choppy. I do want to point out it's kind of an interesting story if you really want to get into the woods with this. Amazon is going to be added to the Dow. They're going to replace Walgreens, so WBA, right? That'll happen on Monday. Amazon is getting added to the Dow not because they want to, but because Walmart forced them to. The Walmart 3-for-1 stock split there means that, look at that stock now will have much less weighting in the Dow. Remember, the Dow is a price-weighted index. The higher your price, the more weight you have. The S&P is value. The more valuable your company it is, in Nvidia in this case, the more weight that you have in the S&P. So you got about $170 stock there doing a 3-for-1 stock split. What do you think they replace it with? The best $170 stock that they can find, so that the weighting of the Dow doesn't get screwed up and the top, like United Healthcare, Caterpillar, etc., can't screw up the performance of the Dow. I don't know if it'll work for them, but just keep in mind that that's what's happening. And if you really want to have some fun with how that all came to be, you know, I'm not the guy to do that, but that gives you a little bit of an overview. All right, if you look at gold sideways here, same thing. I just want to keep pointing that out. Remember, when the time comes, how many of you, you remember, when inflation was high, you're like, nah, I think I'll buy some gold. Remember the answer. Remember what we talked about. No, don't do that. What are you doing? You're asking for nothing to happen. When gold has its move, it's over. You missed it. You have to participate in the nothingness of what's happening now in order to enjoy what you believe to be the next move going forward. Gold does not trend like something like oil tends to do. So oil's got a little bit of an uptrend here, really seems to be building pressure, building cause to pop up above this 79 to 80 bucks kind of area there that it struggled with, and working on a new uptrend, although that's not the kind of uptrend I like to guess on. If you look at interest rates, ever so slightly moving higher again today. So we've got prices moving lower. That means interest rates moving higher as well. And that's on the short term as well as the long term end of things if you want to look at that. Now, let's talk about mean reversion. You know what that means? That's a fancy way of saying just pull back. Prices went too far too fast, and there's nothing else wrong besides the value, the price of that underlying asset. So, for example, car prices, eggs. Let's do eggs. So egg prices shot up, and it was like social media chaos, right? We're all like, egg prices, this is crazy. Did anything change about eggs? Eggs are still eggs, but the price got out of control, and so it fell back towards the mean, right? Or roughly the average. It's maybe slightly above still, but nonetheless, egg is still fine. The egg did not get any worse. We did not get now 6 eggs or 7 eggs in a pack instead of 12. No, the eggs are the same. It's just the price got out of control. The greed got out of control. Well, that happens in stocks, right? And so you have to be careful when you look, because something like Nvidia is a good example, right? When something like this goes a little too far too fast, that doesn't mean it can't go higher. But when it eventually pulls back, often it's not because something bad happened. Nvidia's great proof of that. It fell for the last 3 days. Why? Earnings came out and showed things are great. Everything's good. We're very happy with things. $730-something now, almost near the all-time highs again. So remember that if you participate in a stock, I'll give you some others here, something like Meta. Oh, price has gone a little too far. We've temporarily overvalued the price of this stock. We got ahead of ourselves and threw too much money in there. If and when it pulls back, it doesn't mean Meta's a bad company. That gets you excited, right? It just means that the price is coming more towards something that's likely more realistic over the course of many months and weeks and all that stuff. But day to day, we just got a little excited. Amazon would be the same. Look at the same things happen here. Amazon doesn't like to get too far. This is a well-established company that we can all pretty quickly come to an agreed upon fair value. When it goes above that fair value, it pulls back, right? Nothing's wrong with Amazon. It'll be just fine. The company didn't change, that's what I mean. Microsoft has been doing the same thing. That's all that is. It happens in the short term. It happens in this sort of quicker, tighter rallies there. Oh, I'm going to go with this for a second. This SMCI, right? Okay, right? I honestly would have told you it was well overbought somewhere around here, right? Just totally be fair about it. It gets more overbought. Greed. It hits social media. Oh my God, I got to be a part of this. It's going to go over $1,000. Sure, it did. Where's it at now? Reverting to the mean. We all realized we got carried away with that stock. You better be quick to get out. Does it mean there's something wrong with this stock? No, the value of the company was determined to be too low at this point. we then set the value somewhere way up here, and that was too far. We overshot. That's all it is. Oh, and by the way, if you want to go outside of it, it's not all tech stocks. Look at Tapestry right now, right? Coach and Kate Spade and those things with the bags and, you know, all the fanciness. So you got this going too far, too fast. Is Kate Spade all of a sudden a bad company if this falls? Nothing, no, not at all. Right? Nothing is likely to change. And add to that, earnings. We're already past earnings. So there's not going to be any news event really that says somehow the fundamentals of this company have changed and it is no longer a good value and it falls apart. It's not going to happen. But we see that pullback and think, oh my God, what happened? Things were going so well. Mean reversion. Now you can sound fancy in front of your friends. Okay, let's do some stocks in the news. I'm going to focus on one for just a second that I think was really interesting. Toll Brothers. Okay, this is not the stock that makes headlines. Nvidia steals the show, but my God, Toll Brothers. Earnings come in over 25% higher than expected. So think about that for a second. The brightest and people that spend the most time analyzing just this company, and usually the others, but for the sake of this, just this company, they all ran the numbers. They even got to go to the CEO. You know, there's something called Investor Day or Analyst Day at the company. All the analysts that cover these stocks literally walk into the office, they grab the CFO, put him down in a chair, and the analysts get to ask any question they want prior to making their decisions, prior to earnings. It's totally legal. I mean, they're not saying like spill the beans. They're looking at their numbers and going, tell me more about this right here. Why did you adjust this? Why are your margins going down or up or whatever? So if the brightest people that have more information than we'll know can go into a room and ask any question they want and still be off by 25%, it tells you something, man. That tells you something about the stock. Anyway, so they beat by 25%. Revenue was up by about sales, up about 5% there. Orders, sales, backlogs, adjusted margins, all beat expectations. Check this out. Here is a history of their gross margins, just to give you an example of how much they're making at the moment and why this stock price is responding the way it is. So going back to 2017, that's as far as I could go. Quarter over quarter, right? Just moving along. Hey, decent margins in the 20-somethings and the high teens. All of a sudden, COVID hits, or as we're going into all that mess, I guess I'll buy a home. Interest rates are low. This is great. We now have 27.5% margins for a home builder, right? That is really, really impressive there. And they even said for the full year, hey, we've had a strong start to the spring selling season. We don't see any reason for a change. And one other thing, they had a property, a piece of land, that they had essentially acquired. Their cost was $5.7 million. They sold it for $175 million. So not only does that give you insight into how well they're doing, but also how well real estate development is doing in the right little sub-industry sort of things there. So I thought that was really cool. That's why I spent an extra moment on that one. Caesars. So anything related to Vegas, Caesars-wise, did not do well here. Revenues and sales total down by 2%. I did my part. I went to Caesars. I had some drinks. What was it, just a couple weeks ago? Had some drinks, made a few bets, lost the bets, all the bets. So, you know, they got me for a few bucks, and I'll probably won't go back, but I did my part is all I'm trying to say there. Anything that wasn't Vegas related did well, right? So, okay, good for them. Digital gaming, gambling, all of that did well. Just anything related Vegas, a little bit of weakness there. I don't know if I could read too much into that for the moment without more information. Diamondback beats by 4 cents or so. They were expected to make 470. They make 474. Sales better than expected. The problem here is mean reversion, right? If you were waiting for earnings to buy the stock, and now you find out, oh, okay, the coast is clear. Oh, all right, I like that. Wait, you want me to pay $180 for this? I'm not sure that that's good. In the last 5 days, I could have saved a whole bunch of money. Maybe I'll just sit back and wait. And I think that's what you have going on there. Earnings-wise, I'll take your questions if you have any. Oh, Jazz After Dark, by the way. Is that up? No? Maybe, yeah, okay. Jazz After Dark. So We'll have one coming out there, talking more about the sort of insides of building a portfolio, right? Instead of saying that's a hot stock, all of you are about to ask the question, what do you think about this stock? What do you think about that stock? What if we went and said, let's do it like the pros do it. Let's not just pick a stock because we rolled over. What's the problem? Yes, it could, right? Yeah, it's going to be a good one. You'll see. Just a little bit more detail into it there. Earnings-wise, you've got, Dr. Pepper, right? Keurig Dr. Pepper is going to report. You have Moderna going into tomorrow, I'm saying. Newmont Mining, Pool Corp. Then in the afternoon, you have Booking Holdings, Wayfair, Intuit, and Block will be reporting. The best of all of them actually is one that I didn't mention. Mercado Libre has been higher 7 of the last 8 earnings reports there. They have the best record going out of the stocks that are reporting tomorrow. And the worst is Pool Corp. Yeah. All right. So Pool Corp has been down 7 of the last 8, if you're curious about that. So we will see. All right. Let's pop this out. Take your questions. Do our thing. Home builders. Kirk says, I'm not into picking stocks, man. Yeah, there you go. I mean, you can. There's nothing wrong with that. You can certainly have a passion for something. But we're going to take a little bit of a deeper dive into portfolios as a whole. Like as a true fund manager, what would you do? Vegas, way too expensive. I would agree. Yeah, it kind of caught me by surprise because I was really just going for one thing. And boy, yeah, it was expensive out there in the desert there. Serby says, this is the deja vu argument that we had with Tesla before it ran to 2,400 shares, then split. I think Nvidia is going to be much higher than a solid announcement to boost it higher. Cool. So buy it. Serby, what are you waiting for? If you haven't bought it, then now is the time to buy it, right? There's no better time than the time you're excited to buy it. $737 up here. Nope, a little bit further. Almost at highs. It may have even gone over highs there. Grateful says, it was raised in Nevada. Never saw that dad put even a nickel in a slot machine. You know what kind of frustrates me? No one knows what the hell's going on these slot machines, right? I intentionally went and found the old-timey one where it was like the poker game. I like that. So you put $1 in and then you get to play poker and all that. The ones where you like pull the handle and like a bull goes by and then Kermit the Frog and then there's like a big lightning bolt or something. I even told you guys, I asked the lady, I'm like, what are you doing? And how does it work? And she's like, I don't know. I'm just doing it. Come on. Yep. Home builders show the economy still strong at the moment. Soft landing. Team soft landing, man. Yeah. Love it. Zion, best sector to invest for the next 5 years. Tell me, which one is it? I can't say. Lucas, to avoid, if you're a client and you're in wine and wealth, that's a great question, actually. And I'll break it down. Maybe we'll make that part of the class, but I can't get in trouble say it publicly, which I don't know how they do it on TV. You know, when they're on TV and they have like 5 of the advisors and they're like, okay, before we go, what's your best pick for next week? You know, and they rattle off a name. I don't know how they get away with that. You're not allowed to do that, but somehow they do. And I'm not them. So, you know. Lucas, to avoid the audience, you could do top 3 stock picks of the year. Then if one is a miss, no sweat. Yeah, just throw like 50. I'll do like Kramer. I'll just keep throwing them out. One of them's going to go. Sure. Yeah, that sounds right. Actually, Kramer has a good track record. People pick on him, but he is, I even pick on him too a little bit, but he's got a good track record. Yeah. All right. Well, we're getting into the gambling talk there, and that was a painful experience for me, so I won't talk about that one too much. I did have a good time, to be honest. I did a lot of walking around just looking at stuff because it's an impressive area, but how do they build all the buildings? I told you, as soon as I got off the plane, I'm looking at all the buildings. I'm like, this is nice. So you mean nobody must win then? Because you couldn't afford this if people were winning all the time. Entertainment. Think of it as entertainment. All right, enjoy. If you are younger and you are trying to learn finance, investing, personal finance, check out Haley's channel, Doe Straight. She actually is going over things in little bite-sized pieces with the attention span that most of the younger crowd has. Not that that's a bad thing, just saying. But oh, and I saw a Tesla truck the other day. Like I actually got to touch it and get in it and stuff. Yeah, the Tesla store over there at the mall. They got one in there. Yeah, smaller than it looks in the pictures. Yeah, but you know, it's still ugly. All right. Well, enjoy the rest of your day or evening. We will see you guys. Yep, just when we see you. Adios.